Who's looking for a cheap AI stock to trade? SoundHound, SOUN. Bank of America bought 12 million shares last week. I don't know, they think it's gonna go up. Let's take a look at the stock and see what kind of money we can make trading options on it. I'm gonna walk through a whole bunch of different trades using my Thinkorswim platform. Let's jump right in. A 1-year chart of SoundHound, and they're not too expensive, $11.63 per share. Now here's what I thought was interesting. Here is an SEC filing from last week showing how Bank of America purchased 12 million shares of SoundHound. Let's take a look and see what kind of a great deal it might be. Now, since there's only a couple of days left until November 21, we're going to look at a November 28 date. So let's say you want it to be on both sides of the market and you want to buy 100 shares and sell a covered call against it, and you want to sell some puts in case the price drops down. Well, let's walk through the call together first. So if I was purchasing 100 shares, right now it's trading at $11.63 per share. So I would put up $1,163 in capital and I would sell a $12 call. Now, selling a covered call means that you are committing to sell your shares if the price goes higher than the strike price before the contract expires. In this case, November 28 and above $12. Let's take a look at our rate of return. This contract last traded at $50. So we would be making $50 in premium and we're putting up $1,163 in capital. We would be making a 4.2% rate of return over a period of about 7 days. 2 days left of this week and 5 days next week. So we're going to annualize our premium out, multiply by 252, which is the number of trading days in a year, and that gives us a rate of return of about 154%. Now, at the same time, let's say we wanted to sell some puts on the stock as well. Well, I can sell a put that's kind of close to the money. Let's say an $11.50 put, and that last traded at $60. So $60 divided by $11.50, which is the capital needed to make the trade. Very, very inexpensive capital. Well, that gives us a rate of return of 5%, again over a 7-day period, which annualizes out to be 187% on our money. Now, let's say I wanted to go a little bit more conservative. Let's say a $10 put that expires next Friday. That last traded at $11. So we're making $11 and we're committing $1,000 for this trade for every 100 shares. Well, in this case, we're making 1% on our money divided by 7 days times 252, we're making about 39% on our money. Now let's take a look and go out a little further. Let's say we wanted to go to the end of the year. And let's say I don't want to pay $11.63 because why would I pay retail price for a stock? I want to only buy stock at a discount. So if I was to look at a $10 put, and by the way, this has a 19 delta, meaning that it only has a 19% approximate statistical likelihood that the stock is going to drop below $10 before December 26th. And this contract last traded at $55. So I'm going to divide my premium of $55 divided by $1,000, and that gives us a rate of return of 5.5%. Now this is about 5 weeks out. So I'm going to divide by 5. I'm literally making about 1% per week. So if I was to do a trade like this every week, I would be making 57% on my money. And here's the thing, guys. You don't have to just trade one contract. Let's say you have an extra $10,000 sitting in a money market account or a CD at the bank, making 3% per year or something like that. You can move that money into an investment like this. And let's say you were okay to tie up your money for 6 months' time. Let's just see how much money we might be able to make. If we were to look at April 17th, 2026 contract, and let's say I really, really like this stock, I can sell an $11 put that last traded at $223. So I'm going to divide my premium of $223 divided by 1,100, which is the capital needed to make this trade if I'm not using margin. I'm making 20% on my money between now, November, and April, about 5 months' time. So if I was to annualize that out, I'm literally making 48% on my money. Why would you want to keep your money in a CD at the bank or in a money market account making 3%? Now, it is possible that, let's say, this stock might go bankrupt. Who knows? But a quick Google search tells me what kind of investors are investing in SoundHound. Vanguard, BlackRock, and like I said a moment ago, Bank of America purchased 12 million shares just last week. So, what do you guys think of SoundHound? Do you like it or not like it? Do you like different AI stocks? What kind of stocks do you like to invest in? Let me know in the comments. Let me know what other stock that you want me to walk through. If you find information like this helpful, smash the like button, subscribe to my channel. I'm putting up a video every day for 1,000 days. Hope that helps. Happy trading.